What is going on, guys? Good evening. It's your favorite Mortgage Lender, Abdel Kwame with Got Mortgages. We've got so much to unpack, so much going on the market, really heading into the holidays. We're going to go over just what happens with September job report. Remember, the government was shut down for almost a month and a half. Let's see the report that came in. Of course, in my opinion, no shocker, came in stronger than expected. But the one good thing out of all this is that the unemployment rate actually ticked up. The Fed is going to be meeting in about a little over 2 weeks. We're going to see what are some of the things that the Fed is expecting. We'll see, just in my opinion right now, do I think there's going to be a cut? It's literally changing on a day-to-day basis. I personally am not a fan of there being another potential cut. I do see that the market will probably anticipate, especially after the holidays, what this could potentially impact the market, and then we'll kind of take it from there. So do a deeper dive into the September job reports. You guys can see here, makes no sense, right? In July and August, right? August was the first time, along with June, there was actually a loss of jobs. Look at this in September, 119,000 jobs. And let's take a look at this. Not only that, but there was actually a revision of 33,000 jobs that they basically said they were wrong with, deduced. And as you could see, since June, guys, the unemployment rate is ticking up, right? For the start of the year into the midpoint of the year, we were pretty much stuck at that 4.1, 4.2. Then, as you could see here, June, July, August, and September, unemployment rate ticked up. Remember, we're technically not going to get the October report until later on into next month. So important for us to keep that in mind. I think the market is also taking that into effect. Now, you could see here again, 119,000 jobs that were actually created as opposed to 50. Where the heck do they get these numbers? Honestly, I have no idea. If you look at May, June, July, and August, they were all predominantly under 50, except July, just a hair over. And again, that's with the revisions. So again, bottom line, of course, the government shutdown. Remember, the report is going to be delayed. October data, we are not going to get until December 16th. So about 3 weeks from now. But again, the timing, right? Of course, it's no shocker, right? These data reports come out. And it's like, oh, unemployment rate's strong. It's like, well, that makes no sense. So again, the Fed already cut twice, right? September, October. We know even from the last cuts, right? The three that we saw in 2024, the mortgage interest rates actually ticked up. Remember, it's not necessarily the fact that the Fed is cutting, right? Federal funds rate is overnight borrowing rates for banks. It's the comments that the Fed say, specifically the Fed chair. And the comment that Fed Chair Powell actually said was this is a no risk-free path that is going ahead of December 10th cut. It's not a foregone conclusion, which, I mean, I don't know what else could we possibly need. We know that inflation is slowing down. Black Friday and that stuff is probably not going to help the case, but that is taken into consideration. But we know also that from the meeting minutes that came out, significant debate in regards to a December cut. Again, my personal, and I'm going to be biased in this decision and say I don't want a federal cut because chances are, again, the market's already heating up. If we get another Fed cut, again, more buyers start entering the market. Yes, will it allow more inventory? 100%. But I do think that we need that home prices to somewhat stabilize, not depreciate, but stabilize at a point where we're not putting affordability out of the mix. I think I read somewhere where the average age of first-time home buyer is one of the highest it's been in quite some time, and I can certainly understand why, with affordability slowly being things that are, of course, of concern. So two goals that we have, right? We need to keep inflation in check, and we need to make sure employment. I always say that, inflation and employment. For the last 3 years, if you've been watching any of our videos or any of our podcasts, we always talk about those two being contributing factors. Of course, higher inflation means people are spending money. We can't make things cheaper if people are spending money, so there's no rate cut. That's what we pretty much saw all of the first 9 months of 2025 and even 2024. So again, we know that September, again, the job report's mixed, makes no sense in my opinion, but we do know that the ADP report, of course, did show signs. ADP tracks on the private side. Now let's take a look at jobless claims. So on the jobless claims side, we know that weekly unemployment claims actually stayed at 220 to 235. We're just above 1.9 million people. Latest reading 1.974. So just shy of hitting that 2 million mark, which is super, super high. And we know, of course, low initial claims, of course, are a positive sign. We usually see that around the holiday, but we do see not only when people are first filing for unemployment, the key that we need to keep a look at is how commonly are people continuing to file unemployment claims, meaning it's taking longer for them to find a job. Okay. Now let's look at existing home sales. So, of course, that's a factor, right? We know that inflation's a factor, employment's a factor, and then, of course, inventory. People need homes to move into. Now, you could see here the median home price is up 2%, 415,000. Existing home sales on a year-over-year basis up 1.7%. Important part, we're still at such a tight seller's market. Remember, this data is on a national basis. We're based out of New Jersey on the East Coast, Jersey, PA, some type of areas of Connecticut, still super, super hot if the house is priced correctly and it's not priced to a concern where it's just overbidding, sellers being unrealistic or listing agents maybe not necessarily pushing to see that due diligence. We're seeing a 4.4 month supply, which is still super tight. Homes are staying on the market for just over 34 days. Homes are still selling close to 20% above list, right? 19% above, and 32% of home buyers constituting of the market. Okay. So important for us to take a look at. We know inventory dipped to 1.52 million units. Again, nearly around 11% above last year's data. Now, important part two is home builder confidence. You could see the last 2 months, guys. Remember, this is measured on a 100 basis, 50 being that they're basically neutral. Of course, anything under that, not necessarily positive, but you could see here future sales expectation actually for the first time signaling growth, meaning builders are confident in the market, obviously not remaining flat, but actually improving. Of course, that's an important part of mortgage applications are up, home mortgage interest rates are slowly ticking down, and we're starting to see again a little bit of that buyer hesitancy that we really don't see start to truly ease up, right? We do know, of course, when it comes to buyer traffic, that is up. We know current sales expectation, as you could see, really over the last since September, Fed cut, boom, and then November, boom, right? We do know, again, some of the things that we want to take a look at, obviously, on the uncertainty side is important. Now, what are we going to look at this week? We know that, again, the government, obviously, it's going to be a short time frame. We will get updates on PPI report, producer price index on wholesale inflation. That's going to be based, again, on the September data, right? Government will shut down. And then retail sales. Of course, we'll get updates on home price appreciation and then the Case-Shiller report. So again, guys, a lot of different things that we need to make sure that we're keeping an eye out for. I hope everybody has a blessed Thanksgiving. I hope these market updates are helpful. Do me a favor if you guys like wherever you're hearing this, whether it's YouTube, on social media, or Spotify, hit that share button, hit that subscribe button on Spotify and YouTube, and let's continue educating the market and making homeownership possible. Have a blessed day, guys. I'll talk to you guys next week.